So we'll be entering fourth quarter earnings in just a few days. And I'm not sure about you, but I'm so done with these uncertain market days and I cannot wait for this crap to end so we can finally see some green days. Not only one green day followed by two red. I'm talking about when you are traveling on a road and you get all the green lights without any red and your speed gradually keeps increasing. That type of green, because what we have seen in the last few weeks, just one or two green lights won't mean anything. We need a strong rally. So the question is, are we going to get that rally? As much as we want to get a strong rally, let's look at few indicators and also what few analysts are saying. Now, analysts are raising their forecast for the coming earnings seasons, and they kind of have to. No one's like to be a bear, and they all want to be a bull, despite company guidance moving in the opposite direction. Just yesterday, Lululemon came out and said that their fourth quarter or Q4 growth has been muted because of Omicron. Consensus sees 20% EPS growth for the quarter, and Bloomberg is reporting 27% growth is likely. So analysts' revenue outlook continue to surprise, but margin estimates have stalled. This will be the fourth consecutive quarter of double digits earning growth, capping one of the most rapid EPS recoveries from recession in the history. Now, talking about the sectors, there are few sectors which will report amazing earnings. Industrial, energy, and materials are expected to record biggest gains among the sectors for the quarter, but financials and consumer staples will bring the slowest growth. S&P 500 growth and value index are about on par, with each forecast to score a 14% increase. Now, with such confusion in the street where the analysts are still giving bullish estimates while firms are downgrading, let's take a look at few data sets. So take a look at the first chart that I'm sharing with you over here. Right here is an EPS growth year over year. Now, if you can see over here, we had, this is 2020. I'm going to enlarge it. Yeah, this is 2020. And then came 2021. As we all know what happened in 2021 in January, February, and March, we saw some record numbers. And of course, the growth potential was huge. Everything was touching the moon. Now, this was the first quarter. And as you can see from Q4 of 2020, we had this huge spike right here when everything was, of course, looking very good. Then came second quarter of 2021 and then the third quarter. And now we are expecting the fourth quarter, even though we are still gaining the momentum right here, but as you can see the slowdown right here, and there are certain sectors, as I mentioned, are obvious winners. Then come 2022. Now in 2022 we are going to be seeing even less in the Q1 of 2022, and then the second quarter will also decrease, what analysts are saying and what data sets are saying, and then after that we'll see a rally. Now, this is really important point to note over here. In the last 5 quarters, we have seen double-digit growth on S&P, which is of course not possible year over year or quarter over quarter, and that's why we are seeing this effect over here. Now, company guidance for fourth quarter earnings season is tumbling, reversing the bullish trend of the previous 5 quarters, and as mentioned, not agreeing with the analyst. But if you have watched my previous videos, you probably remember when I talk about the pandemic graph. Let me share it one more time over here. So this is the pandemic graph that I always talk about. This is 2019, this is 2020 when the pandemic was surging, and then this is 2021 going into 2022. Now let's say this is a scale 10 to 15, it's just a growth scale. And in 2019, we started over here. Then in 2020, we saw this huge spike because of the pandemic. Everything was, of course, looking really good for the stock market. And the valuation just went through the roof, and the earnings that company were reporting went through the roof. Now, after 2020, we saw a decline right here coming into 2021 because, of course, you cannot sustain that kind of growth all the time. So then after that, we saw the earnings come down and the expectations come down. Then this is 2021 over here. So we peaked in 2020, and then now we are coming to 2021, and then we are starting our journey in 2022. If you pay attention over here, from 2019 into 2021 or 2022, we are still seeing the growth. So this is the chart right here. We are still seeing all this growth. The expectation was seeing these kind of highs, which we are not going to see in 2022 because, again, we are not in pandemic anymore. There is no free money being distributed to the public. That's why we are seeing this right here, even though the growth is looking really good. But we are so used to of seeing this kind of growth that this looks kind of muted. So analysts estimate of S&P 500 sales growth to continue its surge in fourth quarter. Now, index revenue ended third quarter earnings season with 10% above pre-pandemic peak in fourth quarter of 2019 right here, as I mentioned. And excluding the 5 biggest stocks in the index, revenue would be 11% above the peak. I'm interested in financials' fourth quarter numbers because of the latest disappointment in that sector, but because expectations are lowest in that sector, that may help soften the blow on the other hand. Energy and material are expected to lead revenue gains. Now let me show you a chart that shows which industry will lead the way in fourth quarter of 2021. So right here is a chart that Wall Street is expecting what industries are going to lead the fourth quarter of 2021 revenue-wise. Number one, energy. Look at the sector right here. This is amazing. 65% growth. This is huge. Materials, again, 25% growth, which is of course huge. These are the two big winners that I see over here. After that, we have industrial, consumer, information technology, consumer staples, utilities, real estate, and look, financials is at the end. Healthcare and financials are basically staying at the end. That means if the earnings are really bad, the expectation is already low, so we may not see that many low prices even after the bad earnings, because we are expecting the earnings to come really, really bad. So in a way, it's a good thing. In a way, if you're holding the stock in financials, is a bad thing. So with so much uncertainty and discrepancy among sectors, one thing is very clear. Winners of 2021, which were making all-time high last year, will be lucky to gain half of those values this year. But there will be certain winners even in the losing sector. Companies like Robinhood, Upstart may not see the all-time highs they had just not too long ago, but companies like SoFi, Lending Club still present an amazing growth opportunity. I hope I provided some value, and if you liked the video, then consider subscribing and give this video a thumbs up so we can reach out to more investors. For more in-depth conversation and trade alerts, consider joining our Discord and Patreon. Links are in the description below. As always, an absolute pleasure to share all of this with you. Until next time, you all have a sparkling day.